Treasury yields remain near these recent lows we put in, despite an attempt to see them pushed higher earlier this morning. That was thwarted, and we saw buyers coming back into the market. Obviously, a lot of reading of headlines, a lot of waiting to see what's going to happen with the Fed, and certainly a lot of position shifting. But it seems to me that we're making a home for ourselves down at these low levels, right around 210 in the 10-year note yield. Remember that Fed target range is 2.25 to 2.5, and we're 15 basis points below that in the 10-year. So still a lot of correctional moves happening here, but the market seems to have found a little bit of a home at around 210. The decline has slowed, we'll say, at least for now. And if you look at volatility, after touching multi-year highs yesterday, we saw a modest pullback. But let's not take a step back here. Volatility has been essentially in decline since 2016. And we finally got, an uptick that's sustained for more than a day or two. And right now we touched just below 5% yesterday. Today we're a little bit lower than that, but still sort of in no man's land when it comes to volatility in the Treasury market, because as we go back over the last several years, it's been really a one-way trade. It's been low vols. We spent a lot of that time between like 3 and 4%, touching 4% and backing off. Now we're closer to 5%. And that's a significant move that if we can hold it for any period of time would be very remarkable. Lastly, let's look at the Fed. Yeah, 75 basis points are priced into the market for this year of cuts. Now, if you go back just a few weeks, a month, we were talking still about possibilities of rate hikes. And so that's totally gone. You've got January right now pricing in 75 basis points of cuts. And I think at this point, we're not going to see a rate cut in June. I think some are expecting that. I think what the Fed may do is wait until the July meeting and use the June meeting as sort of a setup for that. And then they can follow up the June meeting with Fed Chair Powell's testimony to Congress in July, and then they have the July FOMC meeting. It would be interesting. They have not raised or cut on a serial meeting like we saw in the past in a long time. So right now, July may be that month for possibly a 50 basis point cut, and then they'll wait and see what happens with trade in China and trade in Mexico and trade in whoever, and how the stock market reacts. Because right now the Fed is throwing in its chips here after a long time of saying they're going to be patient, they're going to wait, and they're going to watch. Now it seems that cuts are imminent. But again, I think they're going to be patient with how they cut and likely not go until July. So we may have a little more time under our belt for things to shift around a bit. But right now, 10-year note yields still hovering on those lows. I don't expect any kind of major shift back higher anytime soon, even if good news comes on the headlines with trade with China and whoever. I think at this point it's a position shift. Low yields are here, at least for the medium term. And we have employment on Friday. That obviously could change a lot of things very, very quickly.